Hi there. Welcome to another edition of TokStocks. I'm your host, Keir Reynolds, and today we're lucky enough to have Jim Rakievich, President and CEO of McCoy Global, trades on the TSX with the ticker MCB. Hey, Jim, how you doing today?
Doing great. How are you?
Excellent, thanks. Appreciate you taking a bit of time away from the busy business. Look forward to sort of unpacking it and sort of a first look. Before we get into too much of that, let's get our 60-second pitch out of the way, if that's all right.
Sure. We're
Alrighty.
so McCoy. We're obviously publicly traded on the Toronto Stock Exchange. We're involved in oil and gas industry, 100%. That's where our market is. We operate around the world, and our area of expertise is around wellbore construction. So that's what we do, and we're a technology and products provider to typically service companies or national oil companies around the world, wherever our expertise is required. That's what we do, and we always strive to be the market leader in both exceptional service and technologies.
Approximately how many shares are outstanding, and what is your current market cap?
We've got about 27.5 million shares outstanding, and our market cap is about 73 million, 77 million.
Excellent. And approximately what would be the insider ownership percentage?
About 5%.
And are you a profitable business?
Yes, we are a profitable business and have been for some time. And we were even cash flow positive through COVID.
Hey, excellent. Not too many of your peers can claim that. What are some short-term catalysts that investors should look out for?
Well, we're in a very interesting time in our technology development and near commercialization for the fully integrated package that we've been talking about a lot in our disclosures. We've been public that embarking on field trials with our fully integrated smart TR package. So I think in the near term, what investors should be looking at is when we start to announce where we're at with those. So that's a key milestone in the integrated package. We've shown that we've been very successful in individual technologies that are part of that package, but now the fully integrated package completing successful field trials is a big milestone for us in the near term.
Yeah, excellent. Well, thanks for answering those questions. Why don't we get into a little bit more substance? Maybe first thing, could you give us a bit about your background for those in my audience that might not know who you are? Could you explain a bit about yourself?
Sure. I'm Canadian, born and raised in Alberta, which is kind of like Texas, oil and gas and cattle. And so I actually didn't spend the first half of my career in the oil and gas industry. I was in the trucking business with a very large Canadian logistics and transportation company. And I started there in management in my younger years, and they were fantastic. They really groomed and invested in development of some of us that were there on the team, and worked my way up through the ranks. And then in the mid-90s, McCoy got sold. The third generation of the family sold the business to a private equity group. And a year later, I got headhunted to come and do a turnaround on one of their business units. So I decided to make a move, and I did. And for the first 6 or 7 years at McCoy, I did the fixing of different business. It was a much different business in those days, but I rather enjoyed it, and got to get involved in everything from service parts of the business to manufacturing to distribution, and then got into this hydraulic power tong casing running business. Was the smallest part of the company at the time. It was about a $3 million business when I became CEO in 2002. And now it is our business.
Hey, excellent. I was going to say McCoy's been around for some 110 years, if I'm not
Yeah.
mistaken. It's quite a long history. Not too many companies that we interview on the channel have that sort of longevity. You kind of mentioned a little bit about the business is quite different now than it used to be. What are a couple of key sort of things being involved in energy services within Canada and globally sort of these days?
Well, it's the service companies are predominantly our customer base globally. Um, yeah, we sell to drillers as well as casing running companies, but the service companies are our customers. We're not a service company. We
Sure.
don't take the work away. We don't run the casing. Our job is to listen to the voice of the customer, understand what challenges they have in running casing wells successfully, both land and offshore, and to develop and design solutions that make their jobs easier, safer, more efficient, and try to be uh, ahead of the curve when it comes to developing technologies that achieve that.
What's a typical day look like for you? Some of our audience is always interested to hear, what different executives sort of days look like. What's a typical or atypical day sort of look like for you?
Well, one of the reasons that the job's fun is because it's not a typical day. In a lot of cases, what's typical is I'm a morning person, so I get up and I'm in the office about 6 in the morning. I like that first hour of time to get through the emails and get organized and get ready for the day and get things done that need to be looked after before the uh, everybody starts emails start coming, calls and Teams meetings and everything else. It is a bit unusual in our business. We're global, so we have operations in the Middle East, and we have a lot of customers in the Eastern Hemisphere. So what makes it doesn't happen every day or every week, but it happens a lot. I can be on a call at 6 in the morning with the Middle East with the client, or I can get out of bed uh, at 11 and put a shirt on and go do a virtual call with the Middle East at midnight from home. When you're working in uh, around the world, uh, the clock is always going. And but typical day, get to work, do that early. But we have regular, senior leadership get-togethers. We want to always know what's going on. What happened the day before is automatic. We've got a really good ERP system that uh, every morning I get to see what was ordered the day before, where we're at with sales. We can measure quoting activity uh, several times a week. I even have direct interaction with customers, whether it be in person or virtually. And then investor relations takes up some of the days as well. So there's always something, and we're when you're in the business, keeping the finger on the pulse. And then Lindsay, our CFO, we always got to keep in close communication where we're at um, with respect to our financial position. So it's just lots of that stuff.
Hey, excellent. Thanks for walking us through that. And I was going to ask a bit about the clock with, doing business in so many different countries on different time zones. So thanks for giving us a bit of a viewpoint into that. Maybe you could give a bit of an overview, sort of on the company and its core technologies and products, just for the layman who might not be like directly involved in your business. What's sort of
Sure.
the core products and technologies that you cover?
So what we do, just to so everybody can understand from a layman's perspective, is that every well that's drilled land or offshore, they have to case the well with pipe, and that pipe is cemented in. And you screw 40-foot pieces of pipe together that have threaded connections. It sounds pretty simple, but it's complicated. The integrity of the well when it's completed and starts producing is absolutely dependent on every one of those connections. And if you think of West Texas with the long laterals, there's probably 300 to 350 connections per well, and every one of them have to be completed correctly, and you have to prove that you've done that correctly. The service company does. The owner of the well is the E&P company, and they hire the service company to run the casing. So they want them to show that they've done it in a safe, efficient, and correct manner. And so what do we provide? We provide them with mechanical tools to be able to grip the pipe and connect the pipe, these pieces together, rotate, and get the threaded connections completed. And then we provide the data acquisition technologies and the software to be able to ensure wellbore integrity, and that the integrity of that connection is done to the OEM specifications.
Hey, excellent. Thanks for giving us a layman's overview on some very important work. Um, Maybe you could, sort of explain a little bit about maybe the competitive environment in terms of that. Are there many other companies that are sort of doing that? How are you guys a bit unique?
So we're unique. The most important way we're unique is when it comes to casing running and all of the mechanical and software and all the technologies required. What differentiates us is we have the full suite of technologies. We do have competitors in each individual product. Some may have two products, but when it comes to the full suite, that really sets us apart from the competition, especially in areas like the Middle East, where you get customers who are entering the market and they don't have anything. And so they can go to 5 different companies, or they can come to McCoy. And because the other thing that differentiates us is we have a physical presence in the Middle East and have for a long time. And so we have the customer support, we have the technical sales, we have the distribution warehouse. If you want spare parts, we can ship them the same day. And so it's very much appreciated to have that customer support in those regions. And so for a competitor to replicate a complete order, it's pretty tough. But we can do that. That really differentiates us.
So you guys are a bit of a one-stop shop, whereas other competitors might just do a niche or one aspect or a couple aspects of the product, not the full suite that a services company might need.
One-stop shop is a good way to describe us.
And you also operate in over 50 countries, if I did my research correct. What are some of the regions that are sort of showing the most growth? Here in North America, traditional oil and gas industries, almost like a 4-letter word a little bit these days. So where else globally, is this vitally important aspect of the business sort of in growth mode?
Well, we made an announcement in the summer that we received a large order from a large drilling contractor for deep water offshore. That's a pretty important announcement because deep water drilling activity was in a funk for probably 8 to 10 years. It was tough. It's expensive exploration, but it's making a real comeback. And that's good news for McCoy. So the key areas where deepwater offshore is really becoming active again is offshore Brazil. Petrobras is issuing new contracts, it seems like on a weekly basis, with deepwater rigs, whatever's available. The North Sea, particularly on the Norwegian side, and then in areas of Southeast Asia as well. So deepwater offshore is an important market for us. We have less competitors there because it's unique technologies, and you have to have the ability to integrate the equipment onto the drill ship automated systems, and we have that capability. So we've got a history of that, and so we're if we continue to see the trend where deepwater offshore is making a comeback, that's great news for future growth for McCoy. And I guess the other area is the North American land market is, in spite of the declining rig counts, we had our biggest increase in revenue in North America land, and not because they needed the same kind of equipment they've always had. It's because we're delivering new technologies that are providing tremendous value to them, and so we're able to buck the trend and actually have increased sales in a declining rig count market.
Yeah, I was noticing, I was reading some stuff about production, and production seemed to increase. Yet, if you read about rig count, it's going down. So maybe a little you got to read a little bit more into some of that stuff, more than just the headline.
Yeah.
Um, so your company focused both on sort of like the automation and the data solution side of things. Maybe you could explain a bit more about how those sort of things sort of like complement and from a drilling services contractor, what those things sort of do.
Yeah, so whenever they're running casing, there's typically a casing crew of 6 individuals to run 2 shifts. Um, and two of the guys are on the rig floor pulling hand slips, which we replaced with the flush mount spider so they can get out of that dangerous area of the rig and reduce the head count by 1. And then you've got the tong operators, and those guys run the hydraulic power tongs in and out. And then the other 2 guys are torque turn operators. So they're the ones that use our computers and our software, and they monitor the makeup of every connection. They're trained, they're highly trained to be able to make good decisions. If they see something wrong on the makeup on the graph, they can stop. They can stop the completion of that connection, get them to back out, do a thread inspection, find out what's going on before it's that individual that either accepts or rejects a connection. Very important. So our software, historically, what it does is monitor that, and then it controls the final makeup. Going forward, we've censored up all of these pieces of equipment and technologies to be able to take so that more data is coming, so that if they're using a casing running tool, the driller can watch all of this action. And our software is using machine learning to be able to develop an algorithm, and which we have, that individual that's making that decision, our software is actually proving that it can either make the same decision or a better decision. Now, our virtual thread rep technology that we developed gives the ability to remotely. So instead of having 2 guys on each casing crew doing that, you can have one individual in Calgary, in Houston, or anywhere else, be in an office and remotely monitor 4 or 5 jobs at once. They don't have to be anywhere near the rig site. And so
Wow.
with our virtual thread rep, we can do that now.
So I read a little bit. I was reading some stuff. Machine learning came up. AI came up. AI is a word that's sort of thrown around really easily these days.
Yeah.
You explained a little bit how some of that might be relevant, but could you just explain a little further about the AI component for McCoy Global?
Yeah, when it comes to what's the future, and we've already we've had machine learning component of our software for a long time now. We've got really established and developed algorithms, but the future with our smart TR package, and then where we'll end up with a fully automated package, that's where we'll be getting into what I call AI, where the software will be deciding when to function every piece as a functional system. So that's coming. In the deep water offshore market, that already exists. We're bringing it to the land market. So that's in the future. We don't have AI yet, but it's coming.
Yeah, excellent. Thanks for clarifying that. And it's, like I said, it's an often overused term, but great to
Yeah.
hear about how you're transitioning it from an already, utilized industry, and then you're repackaging and repositioning for land. I guess good competitive advantage for you. So, I'd be remiss if I didn't talk about your stock. Your stock That's why we're here. We're here to talk stock. Your stock's been a bit on fire here. I originally was alerted to it in the summer by a pretty well sort of seasoned, oil and gas sort of investor. And I think we're up almost 100% sort of on that investment. Um, so, what do you think in terms of, why that is? Is that related to sort of a share buyback sort of being announced? Was that related to, I guess, reestablishing a dividend sort of policy? What do you sort of account for that? Or were you just playing catch up in terms of valuation?
I think it's a combination of several different things, not just, I don't think you can pinpoint one thing. First of all, our track record for the since COVID has been pretty good. Everything we said we were going to do, we've done, and we've achieved our the targets that we set for ourselves. I think that's very important. We've really increased our investor relations activities in the last 2 years, and not only to bring awareness to the stock, but it seemed like when you looked at valuation, we were lumped into energy services, and we're not. And I'll repeat it again because I'm getting used to doing that. We're not an energy services company, and the
Right.
multiples on energy services companies, have not been stellar, and the market has not, seen that as those valuations as time to increase. And it just seemed like without better communication to the market, we don't want to be lumped into that. We're a technology and products, and that's
Right.
different. And so I think that our multiple, was more reflective of being in the wrong bucket. So I think we've done a pretty good job. We've gone to microcap conferences and other conferences where probably the audience for the size of our company is more appropriate. We've been fortunate in the last 2 years. We've had a bit of turnover in our investor base. For a long time, we had 4 larger institutional shareholders hold over 50% of our stock, and our liquidity was impacted significantly because of that. So we've had some good turnover. Now we've got more liquidity, and we're attracting, I think, the right audience. And I think that as we deliver technologies and we've announced the success we've had and what's coming, maybe there's some anticipation that we're going to be successful.
Yeah, revenue growth has been pretty phenomenal. You had 33 million sort of top line kind of sales revenue in 2021. 2023 came in around 70 billion. What do you think about 2024? Are you shaping up to see further growth this year, or is it sort of maintaining what you've got?
Well, we don't provide guidance, but I will say this is what we've been telling the market is that if you saw how we behaved, how our quarters behaved in the first half, we had a slower start Q1 and then a pretty strong
Yep.
Q2. We expect that pattern to replicate itself in the second half. So Q3 being a little lighter and Q4 hopefully again being very strong. In our business, it's lumpy. And what's one of the important things I try to educate the investment community with McCoy is, we've got contracts coming in from various parts of the world. When they get delivered, when they accept shipments, we use letters of credit. Some of them are large. So timing of when they ship don't always coincide with quarters. And so then it looks
Sure.
like we've got big inventory, but a lot of it's spoken for, but it never left the dock until we changed title, we still own it. So timing is everything, and it's a bit lumpy sometimes. So, but generally, if you look at the first half, we expect that pattern to repeat itself. But growth is our story. So,
And what about margin growth? As
yeah,
a products company rather than a services company, one would expect you to have stronger sort of margins. How's that sort of been growing? Can you cover some of that with us?
I can. There's a slide on our investor presentation that shows, we don't disclose by product line the exact
Sure.
portion of our revenue, but we have gauges that show pieces of that pie. and the margin profile of those categories. So the first category is our newer technologies, the casing running tool, flush mount spiders, those tools. Imagine this, 3 years ago, those sales didn't even exist. So um, our traditional historical hydraulic power tools, those tools have been around for 50 years. Very competitive, lower margin profile because you got to compete. We've got good competitors, and so you end up price and delivery becomes a more important sales pitch. So, but you're starting to see that market, that part of our revenue stream getting smaller, the new technology getting larger, and the margin profile, because it's new technology, we have IP on a lot of it, and less competitive. So we end up with a larger margin. So as long as we keep doing what we say we're going to do, which is bring new technologies to the market, we should expect to see the margin growth act accordingly.
Hey, excellent. Thanks for covering that for us. We covered in our early when I asked you to do your 60-second pitch, but maybe for those that are listening to the longer form interview, would you mind just kind of covering how many shares are outstanding again and what the insider ownership is and maybe what percentage might be owned by institutions?
So there's about this 27.5 million shares outstanding, and inside ownership's about 5%. The largest insider owner myself. I own very close to 1 million shares, common shares. And when it comes to institutional shareholders, I think we still have one of the four that still has just over 10%, but the rest I think are now below. But so we've what percentage they have now that they're below 10%,
Sure.
we don't know.
Right. So you mentioned about being classified wrong and really getting out there and really letting people know you're a products and technology company. You're not a services company. When I was doing some research on the various stock platforms, they do have you listed in the energy services. So my
Yeah,
apology for starting off the interview that way. I think that's a very excellent point to continue to make and for your investor relations strategy to continue to sort of hit home, because energy services are notorious for being highly competitive and it's a service thing. So you get very low sort of margins. So that's been very interesting to hear in this interview, just where you start and stop in your business, and that you really are providing those sort of technology and product solutions for the various service companies to actually implement and use. So you mentioned a little bit about some lumpy aspect of like quarterly financials. So really, people should be judging the business sort of on your annual. Would that be
absolutely.
a fair sort of way of looking at it?
It is. It's much better.
And what are some of the targeted sort of markets for growth? We're sort of seeing, I guess, from looking over the last few years of your business, you're getting a lot more sort of in the Middle East. Are there other areas that out of these 50 countries, other sort of areas of the hemisphere or places in the world that you think are going to continue to be growth markets for the business?
Yeah, there's, it depends on the commodity. It's quite an interesting business. When it comes to oil, the price of oil it's a global commodity. Natural gas is a bit different. So if you go to the Eastern Hemisphere, the price of natural gas is significantly higher than North America because LNG is not caught up enough with making it a more transportable commodity overseas where there's a tremendous amount of high demand. So, gassy areas like Qatar, um, offshore Australia, other parts of the Southeast Asia, we're seeing action. India's really wanting to be a little bit more self-sufficient in producing oil and gas. We're seeing some uplift in areas like Turkey, Turkish Petroleum, which is the national oil company. They have their own rigs now. They have deep water rigs. We've been fortunate to be the provider of the casing running technologies for them. And, we're seeing a bit of resurgence in the North Sea. And so, and of course, South and Central America and South America are also really good markets as well. On the Gulf of Mexico, on the Mexican side, is really ramping up. So we're seeing lots of good pockets of activity, and fortunately, we cover all of them.
Hey, excellent. And just in terms of a couple catalysts that we kind of talked about, but maybe I'll let you unpack it a little bit more for the viewers. You recently reinstated a quarterly dividend. Could you kind of explain a bit about that?
Well, we look at our capital allocation and to determine with our board of directors and our capital allocation committee, what with excess capital or our capital, what do we do with it? Obviously, the number one use of capital is growth and funding capital for our to be able to execute on our strat. That's the number one use. So when we have additional capital available, what are we going to do with it? And part of the other area is return capital to shareholders, and we do that in two ways: with our normal course issuer bid, buying back shares, and we decided to institute a modest and conservative dividend to help reward our shareholders as well.
Yeah, and you'd mentioned the normal course issuer bid. How many shares is that for, and what sort of timeline for that share buyback did you place for the company?
So the normal course issuer bid gets renewed annually, and our annual date is every August. And so we were fortunate last year we were able to fully complete. We were able to buy 10% of the float. And so last year we maxed out. We bought back 1.7 million shares at I think an average price of $1.47. And so we were pretty happy with that. We do have a formula that at which point we recommend to the board that this is our number. Anything at that number or lower, we want to execute on that normal course issuer bid. So we did renew the normal course issuer bid just recently. So we're good for another 12 months. And it's the same amount for 10% of the float if we choose to execute.
Excellent. Thanks for covering that. And we don't often see that in the microcap category. So good stuff. That's great. Shows again, 110-year history of the business and some of the recent, I guess, since your tenure with the company and really transforming it. So good stuff. The energy sector can be a bit unpredictable, boom and bust sort of periods of time. What are some of the bigger risks that are kind of faced by that McCoy Global faces, and then how are you mitigating those for the business?
Say what's in the immediate term, there's a risk. I don't know how high it is, but there's some conflict going on in the Middle East right now, and we don't know. From a risk perspective, the Middle East is a pretty important market for us. And if that conflict gets accelerated for whatever reason and expands into throughout that region or into other parts of the region, it could be quite disruptive. Now, how do we mitigate that? Well, history says if something like that happens, what's going to happen next is that the price of oil is going to spike quite a bit because of lack of production in those regions. And so, fortunately, the way we can mitigate that is because we're global, those other markets will get busier, so we'll hopefully be able to make up for it in those regions.
Excellent. And how do you sort of maintain McCoy's sort of leadership position? What are you doing in terms of R&D and really trying to stay ahead of the curve in terms of the technology and product suite?
I would say the number one thing that we do that's got us where we are and will continue to take us is our customer engagement. You can't sit in an office and design something that's cool. You got to solve a problem for a customer. Otherwise, why the hell are they going to buy it? And so we spend a lot of time with our customers listening to them and let them explain what their biggest what their biggest challenges are, their problems, what could make their life better and make them more profitable. And then we go back and help solve their problem.
Approximately how many sort of staff or how big's your team with McCoy?
Just under 150, 148, I think today.
Hey, excellent. That's great.
We're small, but we punch above our weight class.
Yeah, well, that's fantastic. And in terms of like being able to train customers on your products, is that something that how do you go sort of about that? Are these clients well entrenched and they sort of are quite familiar with your products over time, or do you sort of have a onboarding sort of process for any sort of new clients or clients that might have newer staff that might not be familiar with your software and technology package?
Yeah, that customer support's really important. And, we endeavor to provide the best customer support available in our space. And so we have uh, expertise with technical service people to be able to go out, train customers. When we sell a large package, often we'll what we describe as commission the equipment. So we'll send a tech out when that package arrives on site. Then we help them assemble everything, make sure everything's working, and then we train their people. We even provide certifications that they're trained properly. Especially on the software side, it's really important. So training, if you follow McCoy on LinkedIn, you'll see many cases where even customers have posted, thanking a picture of their staff in Colombia, completing a training course in their training room from our staff. So yeah, it is important, and then to upgrade them because there's turnover in their folks, and they need a outlet to be able to train.
So you're operating in about 50 countries. Where do you sort of maintain
Yeah.
offices and where there be permanent sort of staff?
So our largest facilities in Broussard, Louisiana, where we produce most of our hardware equipment, the equipment side, and our consumables and replacement parts. So that's our largest facility. And so we have technical people there and engineering there. And then in Cedar Park, Texas, which is just a suburb of Austin, is where we have all our data acquisition group. I call them our Sparky guys, electrical engineers, sensor experts, and that's where we have the expertise. We produce our torque turn and data acquisition equipment there and software. And then in the Middle East, we cover the Eastern Hemisphere out of our base in Jebel Ali, which is just outside of Dubai. And we have a distribution warehouse, technical sales support, service support, and warehouse with replacement parts and rental equipment, etc. So we cover all of the Eastern Hemisphere from Dubai, which is very functional. So every day, if you ask me today, where's our guys out of the Dubai? I can tell you, we've got somebody in Saudi, somebody in Oman, somebody in Kuwait, somebody in Vietnam, wherever.
Switching gears a little bit, how much debt does the company have?
Zero.
Hey, great answer. You'd expect for a company producing and having to develop new technology, you'd be levered up the hilt. So that's nice to hear. Great stuff. Um, what are sort of the top three catalysts that you see that investors should be looking out for over the next 6 to 12 months?
Well, I think the next 6 to 12 months is what's really going to be important is the successful completing the successful field trials of the Smart TR package. And then going forward into the new year, we got to get into that adoption phase. So we'll do our best to keep informing the market how we're progressing on that. It takes time. You just because it works for us in the field doesn't mean the customer's going to buy it. It has to be proven, solve the problems, and do what we say it's going to do. So that's really important. And I guess, stay tuned as we, still commercialize individual products.
Excellent. And why should retail investors consider McCoy Global as a compelling investment opportunity today?
I think because if you look at our slide deck, if anybody takes the time to look at our investor slide deck, with our smart TR package, the problem we're solving is big. It's a big number. There's $1 billion of labor spent every year in running casing, just labor. Now, we're not going to capture it all, but if we can eliminate 2/3 of that cost, still a $700 million savings to be had in this world. Now, if we can capture 30% of that, that's a $200-300 million. And so if we can share that with those that save some of that, it's still a big number compared to the size of our revenue. And so I think that's the message I'd like to leave the audience with, that the opportunities, there's incremental opportunities and growth in individual technologies, but if we can share in the savings we're going to provide the market, I think there's a big opportunity.
Great. Well, I'll make sure that we link your presentation description below so people can find that. So appreciate that. I found that to be a useful document when I was doing a bit of research and preparation for this. Any final thoughts you might want to leave our audience with?
No, just stay tuned. We're thankful that we've had this opportunity, and if we can get any of your audience to keep an eye on us, that's we've accomplished what we wanted to today.
Yeah, well, we like good long-term growth stories, compounders, that doing things like share buybacks, doing things like dividends, doing things like continuing to grow top line, maintaining margin, growing margins. So definitely McCoy's ticked a lot of boxes for us. And boy, again, not a lot of shares out, which is something that is quite admirable. Something to be, normally we're looking at these things and people don't care as much. Some of the executives don't care as much about dilution, but dilution is very key. And so, as you can see, a little bit of further liquidity, from some new exposure, getting that message out about being a technology company rather than a services company. Your shares have been have increased quite nicely over the last sort of 6 months. So good stuff. Look forward to checking in. We like to sort of do quarterly updates, sort of see how the business is doing, maybe cover some of the quarterly financials, shorter sort of video than our first look, but sort of maintain coverage. So look forward to catching up with you here in another sort of 3 months. And Jim, thanks so much for your time and taking some time to really get into the nitty-gritty of your business. Excellent, excellent job.
No problem. Thank you very much and appreciate it.